Hello everyone, welcome back to Millennial Money Moves. So if you're new today, this is a visual podcast where we like to talk about investing, saving, and all things relating to creating wealth. So in today's podcast, I thought it would be quite interesting for me to kind of reflect on the first 6 months of my investment journey. So for those of you who know, I started investing last year, 2020, in June, and basically have not looked back. So as you can see here on the screen, this is my current portfolio, and tomorrow I'm actually going to be recording a portfolio update for you guys. So for January, so make sure that you subscribe so that you don't miss out the next video. So today's video, I'm going to speak to you guys about the 6 lessons from 6 months of investing in stocks. What I wish I knew. So as you know, my main trading platform is Trading 212, and yeah, I haven't really tried anything else, but perhaps this is something that I will do in the future. So I guess my experience is basically based on what I've experienced having invested in Trading 212. So really, I think the biggest lesson I've learned in the first 6 months is that this investing is really not a fast money making scheme. And for me, I think my biggest lesson was when I actually learned this was when I invested in Amazon. So this Amazon stock, actually, I have a very serious love-hate relationship with, mostly on the hate side, because it has been on the red. It has been basically red since I first got it. What do I mean by that? It's basically, I've had a loss of it for pretty much 90% of the time since I've owned the stock. Why did it happen? So basically, let me tell you a little story. So the first 2 weeks after I started investing, I got a little bit excited. So as you can see, Amazon did really well in March 2020. From March 2020, all the way up to, let me see, where did we go in? All the way up to August 2020. And this is around the time, like I said, I started investing in June. I think I was 2 months into investing now, and I thought I was all-knowing and very confident in my investment decisions. Wrong. So what I basically did here is I got a bit excited, and I saw that Amazon was increasing exponentially, and I was like, you know what? Let me just drop in a lot of money here and see what happens. Well, what happened was I joined Amazon the moment, literally like the next day, it started to go down. It started to go down at the point that I joined. I think I bought in at around this point. As you can see, an immediate decline in value proceeded after. And the worst thing that I did was actually putting a huge amount of money inside. And this brings me to my second point. If you want to do what I did here with Amazon, which is basically investing a lot of money, I would recommend not putting a massive amount of money, especially when it's increasing. I would only put a massive amount of money now on the dip. But even there, I really wouldn't. I would avoid doing lump sum payments, lump sum buys for my investments, because you never know what's going to happen with the stock market. You think it's going up today, but then tomorrow it's going down, and then the next day it's going up. So the best thing to do, again, my second point, is to basically cost average. What do I mean by that? This basically means just kind of spreading your buys over a longer period of time, because then you're getting an average value from the market, which is really a safer way to invest. So yeah, learned that the hard way. So on the same note, I also learned, bringing me to my 6th lesson, I also learned that actually when something is red, so as you can see right now, I'm having a return of minus 27 euros from my Amazon stock. Perhaps I'm going to look at a different stock just to get some variety for you guys here. So let's say, I don't know, SAP. Let's go to that SAP stock. So here with SAP, as you can see that I'm currently in the red. I'm currently in the negative returns, which means that my stock value is less today than it was when I initially paid for it. And ordinarily, I think at least in the first weeks of my investment journey, I would basically start crying. Okay, not really. Maybe inside. I'll start crying inside, like, oh my gosh, I've lost all my money. I need to sell before I lose any more money. Wrong. Don't do that. So, what I've come to learn over the last 6 months is that when your stock is actually having a negative return, you can pretty much view it as a discount. So basically, what this is currently telling me, while I have a minus 3%, 3.19% return, what it's actually telling me is that my stock is currently having a minus 3% discount. So once you start having that perspective, especially as a long-term investor, it really calms you down. And again, bringing into my initial idea of cost averaging, this would be the great time to like really put more money to bring down my average down. So as you can see here, my average price for SAP is currently at 113. Before the drop, I think I bought in quite high. So right now my average is at 113, but I'm pretty sure about that before my average was at around 120. But over the last couple of months, I've been able to put in a bit more money, buy more stocks for SAP just to bring that average down. So yeah, it's an opportunity when you're having a discounted stock, but I guess the caveat there is also that not all companies are guaranteed to go up. So it really comes back to having really good investments to begin with companies that are recovering when they do go down. So moving on to let me see. My fourth point, I think I already touched on a bit, that you shouldn't follow the hype. Just because everyone is buying a stock doesn't mean that you should buy it as well. It may not be good for you. It may not be the right stock for you, for your portfolio. You just remember, when you start investing, I realized more that it's good to have a strategy, so that when things go down, at least you have a very good justification for why you're investing in this company. For example, for me, I invested in SAP. As you can see, I've got quite a lot of money in there, and even when it went down, I had confidence in my investment choices because I had done the research. So I knew that this is a very robust company, which is not just going to go down. And as you can see, it's recovering quite well. And soon enough, I'm pretty sure it's going to start generating money again. So yeah, finally, okay, maybe not yet finally, the sixth lesson would be that when it comes to investing, like I said, it's not first money and it's definitely a long game. So I would really recommend having your investments automated, and Trading 212 is really good because it gives you the option to have what they're calling pies. So here, as you can see, I have my 3 pies. Let me know in the comment section if you really want to see a breakdown of my pies. Well, actually, I'm going to link them down in the description bar anyway, and you can have a look at them yourselves. And also, if you want to invest in them yourselves, you'll be able to do that and get a free stock, by the way, if it's your first time signing up on Trading 212. So basically, having this 3 pies that really allows me to automate my investments, so I don't have to think about it so much. Bear in mind, this is valuable when you have made really good investment choices in the beginning. So it really starts from the core. I would, maybe if you want another video for the stocks, I would recommend for beginners. I think I'm going to make another video for that. Make sure you subscribe so that you're informed when I'm releasing this video, which will be really helpful for anyone starting to invest. And I can basically share like the maybe top 3 or 5 stocks that I think are really good for investment starters. So yeah, really, when it comes to investing, I would say this is the best decision that I've made so far. Leading on from last year, as you can see that I'm currently at a return of almost at about 9%, which is pretty amazing for someone who's just started investing in the last 6 months. But I'm sure it's going to get better as I get more knowledge and share with you guys. But yeah, I hope that was interesting for you. Let me know if you guys have been investing for a bit longer, if you've learned anything that I missed out here. Let's share knowledge. So yeah. If you're thinking of investing, I have the link in my description bar for you if you want to start investing with Trading 212, which allows you to get a free stock with up to £100 if you're in the UK, or €100 if you're in Europe. and this will basically give you a head start in your portfolio. And yeah, I will get a stock too, at no extra cost to you, so just to keep that clear. So yeah, I really hope you found that interesting, guys, and stay tuned for my next video.